Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right. We are back. This is the Investor Coaching Show. Paul Winkler along with Evan Barnard. Yeah, we were talking about that. Evan and I were talking during the break about those. I started made a comment about the Trump accounts and some of the changes in that, and whether you add to them or not. That's something that people have been asking. Do you think you ought to do that? And at first, I was like, no. I'm not a big fan of them. But there have been some changes coming about recently, and you've been seeing some of that. I think you looked at it right now, Evan, and you were seeing some things out there.
Yeah, just as some of the clarity comes out, it's a new thing, and the IRS has just recently issued a ruling that, the kids that are born from 25 through, I think, 28 are the only ones eligible for the government $1,000 contribution. There's a lot of corporations, individuals,
there have been some wealthy people that have been
pumping
throwing some money
into it, but that's irrespective of the government's contribution. And they issued guidance recently that you actually have 17 years if your child fits that time frame of being born 25 to 28 to actually claim the $1,000. Now, why you would wait 16 years to do that, I don't know. But
that's interesting. Now that I did not know.
You don't have to sign up the day they're born, and you missed out if you don't.
You might
You've
as
got
well,
plenty
right?
of time. But what not scared us, caused me to not be too enthused about this was you pretty much have to invest in all U.S. large cap to comply with the rules of the Trump account, index fund, something like that.
Indexes, can be problematic, but really problematic if you're really focused only on
and just one category.
One category, right?
And so when the child turns 18 on their 18th birthday, I believe, you can convert that to a traditional IRA, and
which is really interesting
without tax consequences. And then once you have it in just your own traditional IRA, you could invest it, however you want to allocate that. So I don't know if that was clearly communicated at the start. It kind of acts like an IRA anyway.
Yeah, I don't think it
for
even
the first
was,
17 years.
I don't even think it was. You had the ability to do it at the very, very start. It's just little by little there are new things coming out, and one of our guys actually sat through a tax workshop in here, and he's the one that actually alerted me to it.
Okay, yeah.
Jim actually sat through a tax workshop, and
God
he was
bless
like,
him.
"Hey, yeah, exactly." That's what I love, hang out with nerds and you can't help it. It's going to rub off. But that I think is a lot more interesting. Now, I think one of the things that you really got to watch out for, there are investment firms out there that are trying to get you to put their money with them. They're already gearing up to accept this money. And unfortunately, a lot of the investment firms are doing it and really enticing people to gamble. Younger people especially. Gamble with the assets, and I think it'd be a shame.
In Trump accounts or in general, you're talking about?
Trump accounts. With Trump accounts, yeah. I've been seeing stuff this week. And, so I don't know if you have the ability to move it quicker and that they're going to be able to do it faster, because why would they be messing with it if they're 18 years?
I thought it had to be a fund, frankly. I didn't know you could buy
this
individual
is why,
stocks.
And we're gonna keep investigating this because new information keeps coming out about how to run these things. Right. But at the very least, if you're eligible, you're one of these people that's eligible for this thing. Don't wait. Have them sign up for the account right away.
Yeah, and I don't think
if you're one of these people that's with a child born between those 2 years.
I don't believe you can fund it until July 1st.
Oh, okay.
I believe, because it's tied to the 250th anniversary and some of that stuff.
Oh.
So I think you can get things in place, and the industry has a few months to get more devious or figure things out, depending on how you look at it. But I don't think you can fund it before July 1st.
Okay.
I'll have to check on that.
All right, yeah. We'll keep you posted. We'll be looking into this and see what's going on. But I saw something that just kind of bugged me a little bit.
Yeah.
Okay, speaking of stuff that bugs me. There was the Robinhood CEO.
Uh-oh.
He was on CNBC this week, interviewing him, and Jim Cramer asks a very pointed question. Now, Jim is one of these guys that advocates a lot of things that, let's just say, we don't agree with, from an investing standpoint.
He's the Antichrist.
Well, I don't want to go that far, but, he does advocate for things that I just go, individual stock investing. We did this, where he made that thing, he had the club meeting. And Evan, I don't know that you heard this. Sometimes things bear repeating.
Okay.
At the very end of their show last week, and he was going to go into the club meeting. And, the investment club is where you learn how to invest. You become, and I hate it that they're using confident investor.
Right.
That's what you see in all the ads, where you become a more confident investor. And, when you're a confident investor, when you think of what does that mean? I go forth and I know what I'm doing. I know why I'm doing it. I don't worry about that I'm going to be making huge mistakes and I'm going to be making big missteps with my money.
Yes.
Does this engender confidence right here? I'm just going to play this and see what you think. I think it's worth listening to.
Jim's got his monthly club meeting in a couple of hours, and you've been talking about it all week. I got to know what you're going to say.
Okay, well, look, I'm going to talk about people who are whining, people who are right, and people who are wrong, and I'm going to go through the portfolio and be very hard on myself. There are 3 or 4 stocks that I literally say I'm wrong on, I've got to do something about, and they're big.
Out of how many stocks do you typically recommend, Evan? Like 5 or 6? Something like that. Okay, but anyway, 3 or 4. It's like the song 2 out of 3 ain't bad, right?
So he's over-diversified.
Companies, and I think you got to listen. I really urge people to sign up because this is a very unorthodox meeting where I say that I am wrong on this one. I have to change.
Well, you've got to. I'm urge you to sign up. To hear what more wrong stuff that comes out of my mouth.
Given the dispersion, the number of stocks that have hit new highs versus new lows,
and then you just gobbledygook, right? It's just after that. Well, I got to give him credit because he points out something that really is quite bad to the Robinhood CEO and saying, hey, what do you think about this thing? Are you behind this thing here? But listen to and this comes under the whole, you are an older person and your kids are going to be inheriting money. Grandkids are going to be inheriting money. There's going to be a huge amount of money that changes hands in the next few years. And you want to make sure that when they get it in their hands, that they don't just blow the entire inheritance that you have worked so hard to put together. So what is it that your kids and your grandkids are investing in is the question. I keep asking people that. And I make the comment, hey, look, your kids, when asked who they turn to for investing, guidance, what do they say? Typically, their parents.
Right.
Quite often, it's their parents, and parents will say, "Oh, I don't want to mess with my kid." And I'm telling our clients, "No,
mess with your kids.
Mess with your kids." But here is what he talked about here, and it just boggles the mind. Anyway.
Now, are you a believer in these ultra-levered exchange-traded funds? I thought the SEC drawing the line in the sand, the investment management, saying that some of these...
Ultra-levered. So what does that mean? That means you're borrowing to bet on the direction of something. You can lever it, because you're hoping that whatever you pay to borrow money... Have you seen this stuff, die... with all this debt, borrow your money all the way to death and basically borrow. Yeah, there are videos out there. I'll talk about it later. I'll come back to that. But anyway, this is don't let me forget that. So this is bad stuff. I've been asked about it. But anyway, ultra levered, you borrow, you're betting on the direction of something and you're hoping it will go up enough that not only do you cover the interest that you had to pay to borrow the money to invest in it, but you're doing this multiple times over and over. You're borrowing to borrow, and you're not doing it just once. We're talking about high levels of leverage right here.
Are too dangerous. They don't want them 5 times.
And 5 times leverage. And the SEC is basically going, this is something, and he's asking. Jim is asking.
Okay. 4 times was okay.
Oh yeah. Well, he's asking the CEO of Robinhood, which a lot of younger people are using.
Yes.
A lot of them are using what he thinks about this thing. That the SEC is just going, No.
Too dangerous. They don't want them 5 times levered. I understand you want everybody to have a chance at being able to invest in anything, but this isn't investing, and it's hurting people.
Good point.
I'll agree with that.
Yeah, this isn't investing. Absolutely.
It's gambling.
That is gambling. That is speculation. So what does he say? What do you think about it?
Well, and I agree with the SEC. How do you feel about it?
Yeah, I mean, look, in general, I think that people should be allowed to do what they want.
People should be allowed to do... Now, I agree with the premise of that.
Well,
that we want to have freedom.
Okay.
But when it comes down to it, you're basically saying people should be allowed to drive, the car that we produce.
Yeah.
They don't know that the car is fatally flawed, let's say.
Mm-hmm.
Let's use it in a product. They have a food product in the grocery store. Oh, the food company should be, the people should be allowed to eat arsenic.
Right.
We would never say that.
Correct.
That doesn't make any sense. So there are times when the government steps in and says, you can't possibly know what's inside this food.
Right.
You don't have that knowledge, right?
Yep.
I mean, you see where I'm going? Okay.
Yeah, I mean, look, in general, I think that people should be allowed to do what they want, but there have to be limits. There have to be controls. It's something we feel strongly about as a platform,
Okay, so sounds good. He's backing off of it a little bit right there. But listen close.
When our competitors were listing millions of crypto assets and meme coins, we stayed very conservative because we know that, lots of mass market consumers.
See, our competitors are pushing all of these meme stocks and cryptos and all of those types of things. Wait till it gets a little bit further. You just this is mind blowing.
Trust Robinhood, and if something is listed,
they trust us. They trust us to do what? To maybe vet things before we allow them on our platform? And you think about it, that you don't want to enable people.
Yeah.
If I trust you, that means you're only going to put things on there that may be actually good for me and okay for me. Not buzzers, bells, and whistles and banners and all that kind of things when I buy a stock.
For a product on Robinhood, we stand behind that product and we hold ourselves to a high standard there. And I think that goes for the exchanges as well. So I think
we stand behind the product. I think he'd give Kamala Harris a run for her money on word salad. I mean, you listen to that word salad.
That'd be tough.
That was just...
But I'm thrilled that you went there, Paul, frankly.
Yeah, should have the ability and should scrutinize the assets on their platforms.
What? What are you talking about? There's more after the break. I've got to share another clip with you after this break because it was just mind-boggling what was said. And remember, keep in mind, on the clip after the break, what was he saying about their competitors? They're pushing meme stocks and what? Crypto.
Right.
Wait till the next segment. You got to check this out. Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities, and interest-bearing accounts, and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. Back here on the Investor Coaching Show, Paul Winkler along with Evan Barnard talking money and investing. Okay. So we had that little segment we're talking about, CEO of Robinhood is on there. A lot of younger people investing in that platform, using that platform to invest. We've talked about it a lot. And, I'm really adamant that people understand, what am I doing? Why am I doing it? Understand a little bit about investing before you do anything. A lot of people they try stuff. They learn based on experience. And I like to learn based on other people's experience. I think that's a much better way of doing things. Much
cheaper.
Yeah. Look at 70, 80 years of academic research and invest in that particular manner. But a lot of people are going to be inheriting a lot of money in the future, and they're going to be trying out stuff with their parents' money. And the point that I made that I've been making recently, talking about when you win the lottery or somebody wins the lottery, how long before they burn through all of the money? We've seen that. And what if the lottery is the inheritance that you give to your kids, your grandkids? They get it, and then all of a sudden they try things because they think that they've got this investing thing down because they've heard something on TV or they've watched TV programs. I've had people say, that I've had clients, where they're having kids get involved in handling their stuff or help out. And
handling
I hear the kids,
parents' assets.
Yeah, parents. And I hear the kids say stuff that it's mortifying. It scares me going, oh my goodness, if you had any idea what your kids are talking about doing with the money once you pass, watch out.
Yes.
Now, so this was in the interview, this was a section that was talked about, and it was statistics. Robinhood statistics. They got into this conversation on what's actually happening there. Okay, so check this out.
Do you find that people are getting more interested in equities? I've always felt I didn't like to skew a lot of Bitcoin. Your stock's trading with Bitcoin. Are you?
Did you catch that?
A lot of Bitcoin, I heard.
Did you catch what he said? Listen, this is Robinhood stock he's talking about, right?
I didn't like to skew a lot of Bitcoin. Your stock's trading with Bitcoin.
Your stock is trading with Bitcoin. The stock goes up and down with Bitcoin. That's basically what he's saying.
Yeah, my guess is Robinhood just on their corporate books must just have a bunch of Bitcoin. My guess is what they're saying.
You think? I mean, it's basically, you look at that and go, wow.
Are you, what percentage are longer term?
No, just Evan, check out this before you go down that rabbit trail too much. But listen to what he says here. This is where the rubber meets the road for me.
Are you, what percentage are longer term equities, IRAs? Is that growing versus, say, the people who flip things?
Okay, so are people actually investing? Because when we talk about investing, we've talked about this before. What is an investment? An investment, you have to have a cost of capital. There has to be somebody paying to use your money. So when I look at a CD, a bank CD, I can call that an investment. I'm getting paid interest. Mm-hmm. I call a money market account an investment. I'm getting paid interest. I'm getting paid for somebody to use my money. Mm-hmm. That's it. When I own a house and I rent it out to somebody, I'm getting paid for the use of my house, and we call that rent payment. So I can call that an investment. Now, there can be a job aspect to real estate, where I buy a place and I fix it up and I sell it to somebody else. I can look at a stock and I go, okay, when I look at a corporate bond, let's go there first. Mm-hmm. And then the company borrows money and they pay me interest. I can look at a stock. When I own the company, I own the assets of the company and I'm getting paid the earnings. And historically, I get paid about $1 of earnings for every $16 for the S&P 500, $1 for every $10 for large U.S. value stock. So, so on and so forth. But I can look at that and say it's an investment. Whereas if I look at a commodity, if I look at a painting, for example, and I say, well, what am I getting paid? I'm not getting paid anything. The painting's just sitting there. And I'm hoping it will go up in value. So that's not, as an academic, would any academic I would listen to anyway, would call an investment. Someone has to watch that because there are people that say stuff, and I'm just like, well, okay, you can go with that, but I'm going with a Nobel Prize winner in what he has. But listen to this.
Yeah, we published the statistic in the last earnings. I want to say something like 40% of our assets are in passive products. So.
Now, what does that mean? Before he goes on, what does it mean, Evan, that they're in passive products? What does that mean?
Most people would say it's an index fund or
where they're buying,
not actively trading.
And they're holding stocks.
Right.
So that's basically what they're doing. They're holding on to those companies, right? Now, and passive, there's versus active stock picking, market timing, okay? So 40% in that.
That includes retirement.
That includes retirement? Passive? You can manage your retirement account in anything you want. You can put it in gold if you want. We see the ads all the time. We can, buy and trade gold. We can jump in and out of stocks. We can stock pick. We can buy individual companies. We can buy actively traded mutual funds. We can buy actively traded ETFs. Oh, by the way, I'm ahead of myself, right? Because he said retirement accounts. Yeah. He's calling this part of the 40% that they have managed retirement accounts. Okay. Now, what else is in that 40%?
Cash or cash sweep product.
Okay, cash. Okay, I'll go with that. That would be passive. Yep.
ETFs.
Well, wait a minute. It used to be, you go back 20 years, ETFs were pretty much all passive.
Correct.
That's not the case anymore.
Also correct.
So what we're seeing is, the huge chunk of our assets are basically passive, and we
huge chunk. He just named 40%, and a lot of that 40% I would take. I would argue that it's not.
I would add a layer to that, actually.
Okay, go ahead.
Is because we see it in multiple other press. Mm-hmm. But just because someone has a passive investment doesn't mean they're sitting on it. And so if he says 40% is in ETFs, even if they were all index ETFs, if they're selling the S&P ETF today to get into the small cap ETF because the war started, that's not passive investing.
No, precisely. It is really not. But, he's saying that the majority of it, or a lot of it. I mean, he didn't say majority. I forgot the word he used.
So what we're seeing is, the huge chunk of our assets.
A huge chunk. And no, the huge chunk is 60%, which is the other side of that equation. Yeah. And even the 40%, so you look at that and go, come on, really?
Assets are basically passive, and we expect that to increase over time. Now, you did mention Bitcoin and, the correlation between our stock. One thing I think the market underappreciates is how diversified this business has become. We've got 11 business lines generating $100 million a year in revenue or more. With
diversification, people hear that, they go, oh, you're diversified. They're talking about his business. And then all the other things that they're into. So it has nothing to do with you diversifying as an investor. But an average person just listening to that would get really confused about all of that. So anyway, that stuff drives me crazy. It'll probably continue to drive me crazy for months and years on end. But anyway, it won't go anyway anytime soon until we don't see people investing in that way. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors. And confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.